It's December 2021, and I'm still getting the question about what to do with the VAT rules. Does it still make sense to do dropshipping now? Well, actually, it does. In today's video, I'm going to go through some questions more to make it clear for you what scenarios do you have. And these scenarios really depend on your setup and also about your location. Before we go into that, please don't forget to subscribe, like, and share this video. It would really appreciate that if you can do that. If you want to know more about the tax rules and regulations, we've made 2 other videos which you can check out on our YouTube channel. That will give you a lot of basic understanding of what you should think about. My name is Simon. I'm from HyperSKU. We're helping thousands of online sellers with their sourcing and shipping from China. We see that a lot of them are great at building their brand and their online presence, but the most difficult part actually is to deal with a supplier, have reliable shipping, and have quality checks before it's shipped out. So we want to make sure you have a reliable and transparent supply chain from the manufacturer to our warehouse to the consumer. That's what we do, and we'd love to do that for much more entrepreneurs and help you on your online journey. So if you're interested in that, please do reach out. Ask for a quote, reach out to my team, and we'll be happy to support you with your journey itself. Cool. So without further ado, we're going to talk about these new VAT rules, which I think is going to be an eye-opener for many. So let me just start with sharing my screen, because that will be much easier to explain what I would like to explain. Okay, so I made an overview of basically sort of decisions of what scenario fits your profile the best. When it comes to selling into the EU, first question you need to consider is you are a web shop seller selling on Shopify, Wix, BigCommerce, WooCommerce, those kind of platforms. So not on the marketplaces like eBay and Amazon. That's a different model. That's different with the setup we're trying to present here right now. First question, are you based in the EU? Not you as an individual, but is your entity, your business entity, based in the EU? And EU is not UK, okay? Is your business entity based in the EU? If so, are your orders fulfilled from outside of the EU? Meaning you place the order, for example, in China or US, and you're bringing them to Europe for to be handled directly to the consumer, okay? Is that the case? Then it's important to know, are you selling in only your country of registration, or are you selling also outside of your country of registration? Meaning you have an entity in Germany, you're selling to Sweden and Spain. If your sales to these countries are more than 10,000 euro per year, you will have to pay the sales tax according to the country of where the sales took place. There's two things to consider. We're talking about sales tax, so your revenue. You have an order to the consumer he pays for it, and in that order, there's normally a tax component. The percentage of that is determined by the local government. I'm not going to spend too much time on IOSS and OSS, so the whole concept of import and sales tax, because that's already in our other videos. Check them out, because that will be useful if you still need some more basic understanding of what the new rules actually apply. This is purely about what are your scenarios, so I'm assuming you have a basic understanding. If you are selling outside of your country of registration, if so, we really suggest to have an IOSS number and an OSS number. That your import is declared under your entity name, and your sales tax is declared under your entity name, and you're paying the tax according to the percentage, VAT percentage in the country or where the sales took place. The scenario for this one is you are trying to build an online business, an European-wide online business, and most of the time, even a brand. For you to have long-term sustainable business, it's important to build a brand, but also to make sure it's compliant. That will otherwise hunt you down all the way, and it will prevent you from any issues in the future. If you don't have any sales outside of more than 10,000 outside of your country of registration, for example, you're running a great business in Germany, let's take Germany for an example again, then it's a different scenario. You have a local business, you just pay your VAT according to your entity, according to the tax VAT percentage in Germany, in this case, Germany. For the import clearance, you can use your own entity or you can use the one of your suppliers. Both options are fine. We do recommend you to create your own simply because that will save you on your cash flow, because otherwise you maybe have to prepay your import tax. If you have your own IOSS number, you don't have to prepay. It will be delayed until you have to pay the revenue tax. So basically you can leverage that part. In this case, scenario 2, you are a local brand owner, you're a local business owner, you're only selling online in your country of registration. Still a great way to scale. You can still go really, really big. It's just more focused on one niche, on one region. If you are fulfilling from outside the EU, but the goods are not as B2C, so you're not shipping out directly from the EU, from outside the EU, but you're buying maybe from China in bulk, that's a different scenario. The whole new rules only apply for B2C shipments. So small parcels, small orders that are being shipped out of country outside of the EU into the EU. Okay. If you buy in bulk or you're buying from a local supplier in the EU, you don't have to worry about this. This is a different way of custom clearance. In this case, quite often you work with local platforms. So you're selling on Cdiscount or Waycomp or Allegro or Bull.com or those kind of platforms. You're buying bulk, bring it to a local warehouse and deal with that. Or you have a European supplier which you do drop shipping from. These are your options if you are based in the EU. 3 options: European brand owner, local brand owner, and selling on local platforms. If you're not based in the EU, but you're selling into the EU, there's still more questions you have to answer. So let's say you're selling into the EU, but you're based in the US. Question is, do you have a fiscal representation? Do you have someone or an entity who helps you with the taxes? If the answer is yes, you have a fiscal representation, then the question is are they helping you with your declaring the import tax and the sales tax? So someone actually doing your monthly or quarterly taxes. If that's the case, you are a non-EU brand owner, you want to have a compliant business for the long term, normally trying to build a brand for the long term, and you don't want any trouble afterwards. In this case, scenario 4, you are a non-European brand owner who wants to grow the business to a larger scale. If you don't have a fiscal representation, most of the time you will not be able to get your tax back. Quite often, you just arrange your supplier to ship the goods, including the import tax. So the supplier will take care of it. Then your sales tax, you probably will not declare. There is a risk to it, obviously. A lot of them choose for a residency outside of the EU. So maybe move to Dubai or Thailand or Bali or those kind of destinations to be able to be away from the residency in the EU and still run their online business according to the business requirements, like the tax requirements in the country where they have a residency. It is very popular at the moment to explore this option. If you would like to know more, please do let us know. We can definitely get you connected with other sellers and other companies who can help you grow in that direction. If you are not selling into EU, very simple, you're not selling into EU, no need to worry about these new changes, no IOSS, no OSS. Don't worry about continue building your business in the UK, Canada, Australia, US, or wherever you want to grow your business. Basically, you are avoiding the EU. These are the 6 scenarios that we have put together for you. Your European brand owner, local brand owner, selling on local platforms, non-EU brand owner. You have your residency outside of the EU and avoiding the EU at all. For us, we recommend scenario 1 and scenario 5 in these 2 situations. Depending on what your strategy would be, that's up to you. We're happy to just jump into a discussion with you to clarify things or help you guide you through this decision tree. please do reach out to us. We would love to help you. You can find our details below. If you like the video, please do subscribe and share with us, and we hope to see you on the next video.